Have you ever wondered how well you truly understand your own investments? It's a question that can make a significant difference in your financial future. You see, the world of investing is vast and complex, with a myriad of industries, companies, and financial instruments to choose from. And one of the keys to successful investing is understanding. Not just a surface-level understanding, but a deep, comprehensive knowledge of your investments. This is where Warren Buffett's circle of competence comes in. It's a concept that encourages investors to focus on areas they understand well, to make informed decisions based on knowledge rather than speculation. Buffett, one of the most successful investors in history, has used this philosophy throughout his career to make astute investment choices. The circle of competence is a fundamental concept in Warren Buffett's investment philosophy, which we will break down in the next segments. The first component of the circle of competence is understanding. This is a cornerstone of the investment philosophy championed by none other than Warren Buffett himself. But what does understanding truly mean in this context? Well, it's all about having a comprehensive grasp of the businesses and industries you're considering for investment. It's not enough to know that a company makes a popular product or that it's been on a hot streak in the stock market. No, it's about delving deeper, peeling back the layers to truly understand the mechanics of the business. Imagine it like this. You're a detective, and the company is your case. You need to scrutinize every clue, every detail. How does the company make money? What are its competitive advantages? What risks does it face? Who's running the show and how competent are they? And lastly, what's the lay of the land in the industry it operates in? Now you might be thinking, that sounds like a lot of work. And you'd be right, but here's the thing. Investing isn't a game of blind luck, it's a game of informed decisions. And to make informed decisions, you need, information. The right kind of information. And that's where understanding comes into play. But remember, understanding is not about knowing everything about every industry. That's unrealistic. It's about recognizing your knowledge boundaries and focusing on areas where you can make sense of things. It's about acknowledging that it's better to be an expert in a few areas than to be a jack of all trades and master of none. So, if you're not quite up to speed with the latest technological advances, maybe tech stocks aren't for you. And that's okay. There are plenty of other industries out there. The key is to find the ones you understand and can navigate confidently. Understanding the ins and outs of a company and its industry is the first step in the circle of competence. And it's a step that sets the stage for the rest of your investment journey. So take the time to understand, to learn, to question. It's an investment in itself and one that can pay off handsomely down the line. The second component of the circle of competence is staying within the circle. This principle is all about playing to your strengths and avoiding the temptation to venture into unknown territories. Imagine you're a seasoned sailor. Navigating the seas is your forte. But if you suddenly decide to trek through a dense forest, chances are you'll find difficulties and might even get lost. The same applies to investments. Staying within your circle of competence means investing in businesses and sectors that you understand well. This doesn't mean you can't explore new avenues, but it's crucial to do so with a thorough understanding and not just on a whim or because it's the latest trend. Venturing into unfamiliar territories without adequate knowledge can lead to uninformed decisions. This lack of understanding can make you vulnerable to market hype or speculation, potentially leading to significant financial losses. On the other hand, when you stay within your circle of competence, you're able to make more informed decisions. You can better evaluate the risks and rewards, the viability of the business model, and the strength of its competitive position. In essence, you're playing on your home ground, where you have the upper hand. This approach also helps in maintaining your confidence as an investor. When you understand your investments, you're less likely to panic when the market fluctuates. Staying within your circle of competence can help you avoid unnecessary risks and make more informed investment decisions. The third component of the circle of competence is the long-term advantage. It's like a game of chess, where the players with a deep understanding of the game, strategic foresight, and a knack for anticipating moves typically win the match. In the realm of investing, this translates to focusing on what you know best, which can lead to long-term success in your investment decisions. You see, when you concentrate on industries and businesses that you're familiar with, you're better equipped to understand trends, evaluate risks, and predict potential outcomes. This understanding can provide a significant edge over those who dive into unfamiliar territories, which is often driven by hype or speculation, rather than a solid understanding of the business. Moreover, the long-term advantage gained from staying within your circle of competence isn't just about making more informed decisions. It's also about resilience. When market storms come, and they will come, understanding your investments gives you the confidence to weather these storms rather than panic selling at the first sign of trouble. By focusing on your circle of competence, you can minimize risks, maximize opportunities, and improve your chances of long-term investment success. It's not just about avoiding losses, but about creating a solid foundation for growth based on informed, strategic decisions. The circle of competence is not just about understanding and staying within your circle, it's also about leveraging that knowledge for long-term success. The fourth and final component of the circle of competence is continuous learning. This is a critical aspect that Warren Buffett consistently emphasizes. You see, the world of investing is not static. It's a dynamic, ever-evolving landscape. New industries emerge, old ones fade, and business models are continually reinvented. So, as investors, we cannot afford to stand still. Buffett encourages us to continually expand our circle of competence through learning. This could mean diving deeper into industries we're already familiar with, or exploring entirely new territories. The more we learn, the broader our circle becomes, and the greater our potential investment opportunities. And let's not forget, learning isn't just about reading financial statements or industry reports. It's about staying curious, seeking diverse perspectives, and asking the right questions. Because the more we know, the better we can navigate the unpredictable waves of the investment world. Continuous learning is the key to gradually widening your circle of competence and becoming a more informed and successful investor. So what have we learned about the circle of competence? It's a fundamental concept in investment philosophy, encouraging us to invest in what we understand well. It's about staying within our competence zone, leveraging our knowledge for long-term advantage, and avoiding uninformed risks. But it's also about continuous learning, expanding our circle gradually through experience. By focusing on what you know best, making informed decisions, and continuously learning, you can navigate the world of investing with more confidence and success.